Hi everyone, welcome back to G2's weekly market update, where we break down the top global market stories and what they mean for investors like you. Let's dive straight in. Starting with the United States. The markets had a strong week. Both the S&P 500 and Nasdaq hit all-time highs again. That's the second week in a row. But it was the small and mid caps that stole the show. The Russell 2000 jumped over 3.5% and the S&P mid cap 400 rose nearly 3%. So, what drove the rally? A few key things. The US Senate and House passed the long-awaited reconciliation bill. Trade talks were in the spotlight again, with new agreements being hinted at, including one with the Vietnam. But the biggest relief came from the jobs report. 147,000 jobs were added in June, slightly better than expected. Unemployment ticked down to 4.1% and wages grew steadily. That strong labor data helped reverse the fear from earlier in the week when ADP reported a surprise drop in private payrolls. So, this official number brought some balance back. Now, on the flip side, manufacturing continues to struggle. The PMI stayed under 50, marking the fourth month of contraction. But services rebounded into expansion, hitting 50.8. Still soft, but a step in the right direction. Bonds and credit. In credit markets, high yield bonds gained on the back of equity strength and positive sentiment. Even investment grade issuances were oversubscribed, showing appetite is still strong, especially ahead of the long US weekend. Over to the Europe now. Markets were mixed, but the big news, inflation hit the ECB's 2% target. That sounds good, right? But Lagarde wasn't ready to celebrate. She made it clear, we are not done yet. The ECB wanted more data before considering more rate cuts. The labour market held up, and in the UK, mortgage approvals rose again. A sign the housing market may be stabilizing after last year's dip. Japan saw a bit of a breather. The Nikkei slipped by nearly 1%, largely due to worries that US-Japan trade talks are stalling. A 24% tariff deadline is looming, and that's making investors nervous. Still, business sentiment improved slightly, and the upcoming elections later this month are something to keep an eye on. China was a mixed bag. Stocks were up with the CSI 300 and Shanghai Composite both rising over 1%. The official manufacturing PMI rose to 49.7, better than expected but still in contraction. On the services side, growth slowed to a 9-month low. So while Beijing's trade deal paused with the US help sentiment, weak domestic demand and hiring concerns remain. G2 takeaway. Markets are holding up surprisingly well. The US labor market continues to surprise on the upside, but underneath, we are seeing signs of caution, especially in hiring, services, and trade talks globally. For us at G2, the next few weeks will be all about watching inflation paths, tariff deadlines, and how central banks react to these data points. So, that's your G2 weekly market update. If you found this helpful, don't forget to follow us for more insights and let us know what's the one thing you are tracking this week. Thanks for watching, and we'll see you next Sunday.